revenue composition, driven by healthcare's 15% or so growth, healthcare nearly 57% of our total business, and thereafter agri at nearly 19% growth. These were the two growth drivers. Of course, consumer, which is nearly 29% of our revenues, has had muted growth, and we'll take you through some of the challenges there. Earnings has been at 9 billion plus, flat due to challenges in the healthcare margins, and that's in a conversation we will have more in detail. Overall, conservatively managed in terms of our debt exposure at about 27% gearing, and strong growth in market cap during the year as we have executed across our businesses. If I go into the details, you will see good growth in top line in Q4. Again, this continues to be our journey forward in terms of scaling each of our businesses. And the challenges in the healthcare margin contraction has led to the drop in PAT, and more. My colleague Shanta will take you through some of the mitigating factors, etc., and some of the challenges we have, which has had an EPS impact across the group as well. As you can see here, while we've had revenue growth in healthcare and agri, our impact in EBIT has come from healthcare, while we have managed to grow significantly in agri. So that is also part of the opportunities in a diversified conglomerate, where we are able to be counter-cyclical to each other in that scope. But overall, across the last many quarters, we've seen healthcare take a lead role in the total scale of the business, followed by consumer, and thereafter agri-business, which is watermelon plantations. I will now hand you over to our colleagues in healthcare, starting with Shanta.
Thank you, Shyam. And good afternoon to everyone. So yes, let me first give you a glimpse of the overall healthcare sector, which shows a Q4 growth year on year of 32.6. This is mainly driven by the distribution business and the devices business driving the Q4 revenues. However, the sector overall for the year ending March have reported 14.9% growth, as Shyam just mentioned. Largely, the sector is impacted from the pharma business, which is the largest business in the sector, from the NMRA pricing that took place somewhere in July 2025, but actively they have the regulator started controlling and reducing prices since November 2025, where the impact moved largely towards the Q4. Moving on, I'll just jump into the pharma business, which is the most impacted from a pricing gazette angle. The revenue declined by 18.5% for the quarter. That's also driven by the bottleneck that created by these pricing regulations, where the regulator, which is NMRA, started reviewing all prices of the entire industry at the issuing import license point, which was not the case for the last 2 years. And this exercise did create a bottleneck, which resulted for Sunshine Pharma also to have delays in their shipments as well as reduction in MRP. So both impacted the quarter. Overall, since the business in the 12 months have fared well, which also has a model change which we actually took place, which we implemented and took place during the latter of Q2, where we shifted all our logistic operations, that is invoicing everything, to our own distribution company, which is the HealthGuard Distribution. However, the company reported revenue growth of 24.4%, while the MAT figures IQVIA recorded 9.5% growth for in terms of the overall market. So moving on from the pharma business, where you do see that the volumes also been challenged. However, the distribution business did fared very well. One reason is that the distribution business was able to attract new clients, so that there were full year sales happening for the business, which was not available last year. So that also gave a good boost, which has given a 25.7% year-on-year 12 months performance, and the distribution business was able to get to their targets and record fair growth for the year. And you may see for the quarter on quarter also the growth is very good for the distribution business. So these are the two businesses that I would like to present, and let me pass on to Eranga, who will take you through the medical devices business, and Lena. Eranga, over to you.
So in terms of medical devices, as you can see the graph, there was a steady growth on a quarterly basis during the year. This was supported by both private and government contribution. So the key positive for this particular business is, like, compared to other businesses in the healthcare sector, this business is less sensitive to margin price pressure. So going on to manufacturing business. So last year, as you can see, last year Q4 was impacted by government price controls, but on a positive note, the business had grown up over the year. And on a year-on-year basis, there was a 5% revenue decrease, which is the net impact of about, say, 9% rate reduction. However, on a positive note, there was 3% volume. So the net impact led up this 5% revenue. So again, on a positive note, during the year, we have improved on our operational efficiencies, and also on a year-on-year basis, we have secured the major increase in the current year purchase order, which of course sets a positive outlook on the future of the company. Let's move to retail. Yeah. So I'll pass on to Farman to take you through the retail business.
Good evening, everybody. Thank you, Eranga. So as you can see, the health card business continues to do well. Year on year, we have a growth of 6% based on offtake. However, if we take IQVIA is the market audit data that is used in healthcare. If you look at the annual growth, which is captured in terms of purchases, health card actually exceeds the growth of the market when it comes to our performance over the last 12 months versus the previous 12 months. One of the challenges that the business actually went through was in our portfolio of wellness. Especially, we have a set of brands which we bring from international markets. Some of those were constrained. So that is why we see a small dip, in the fourth quarter. We hope to address that by actually establishing some new categories that will help us actually kick off growth further in the year to come. As of now, we are happy with this progress, and we have more outlets planned for this year. Last year, we had opened Malabe. Malabe was our last outlet, and I'm happy to say that the outlet actually recovered, or rather broke even much faster than what we planned. So we have a promising expansion plan for the year, and hope to keep the metrics going up. So with that, I will now move on to the next sector. Yes, Iranga, you can pass it.
Anuruddha, over to you.
Thank you, Farman. Thank you, Ashanta. Good evening, everyone. So I'll start with the sector, consumer sector performance. Sector includes both export as well as local branded business. So Q4 revenue, we have done 4.5 billion, up by 3.8 year-on-year. It's moderate performance due to a dip in export business with the ongoing Middle East crisis situation. However, the full year, we have achieved 19 billion, a 2.8 year-on-year increase driven mainly by branded tea and confectionery recovery. In details, I think in the absence of my colleague Sanjeeva, Shafraz will take you through the details. So I will move on to branded business and tea segment. So in tea performance, Q4 revenue, we have recorded 2.8 billion, reflecting 8.9% year-on-year increase. Driven excellence execution both in modern trade as well as general trade in terms of execution. Full year revenue 10.3 billion is marking 7.6 year-on-year growth, driven by 8.7 on volume expansion. Q4, the additional volume we have added 1,361 kgs, up by 10.6 year-on-year. So market share remained relatively stable at 47.4. However, it's a slight drop comparing with the last year same quarter, which is 48.2. The Q2 is a very strong quarter this year. You can see a huge jump from Q1 to Q2 in terms of the total revenue. Next slide, please. In terms of confectionery, Q4 revenue of 530 million, up by 7.2 year-on-year, supported by promotions, initiatives, and wider coverage. It's a great recovery, I would say, what it was. And full year revenue of 2.1 billion and that is an 8.5% improvement with 8.9% volume growth. And we have added 469 kgs volume increase Q4, up by 4.4% year-on-year. Market share, we are recording a dip in market share from 17.2 to 14%. And this is mainly driven by the value share with the high price SKUs and brands and categories from Perfetti, the biggest competitor. I think Shafraz will touch upon the finance in dainty impairment, goodwill impairment and all that. So I will now hand it over to Shafraz for export performance in the absence of Sanjeeva.
Thank you, Anuruddha, and good afternoon, everyone. So from an export business, we faced a very challenging quarter, mainly because of the geopolitical challenges in the Middle East. However, when you look at the export business from an overall perspective, the business was able to grow volume by 8.1%. Despite that, there's a challenging revenue decline because mainly due to the product mix. The product mix had changed from a value addition to bulk, mainly supported through the orders that we have exported to Iran, to the oil for tea program, and the growth that is coming from the Far East market, which is mainly China. So that was the reason where we had a revenue decline in terms of value, while we had a volume growth. But for Q1, we see a positive trend with the Middle East geopolitical situation easing out. There's value-added orders that is coming into the business, which we see as a positive for the export business. And I'll hand it over to Lasantha for the agri update.
Yeah. Good afternoon again. So agribusiness, as I said, this is our Vatavla plantation, which is a mix of both the oil palm business as well as the dairy business. So broadly growth through the year, driven by palm oil volumes and pricing as well. So I'll take you through the palm oil specifics here. So clearly palm oil volumes has grown due to productivity improvements, But through the year, we've also had favorable pricing for both the crude palm oil and the kernel palm oil. So the 25% year-on-year revenue growth is driven by 10% of volume and the balance through pricing. Margins have continued to hold for the year, while quarterly, of course, you will see trends in volume to do with seasonalities, but overall positive contribution from this end of the business. In the dairy part of our business, we've continued to face challenges due to volume contraction. So this is also to do with the cyclicality of the milking herd versus the total herd as we go through some corrections. Milk prices haven't rebounded as much as we expected, even with the shortages. I mean, overall milk volumes in the country have been shorter, have been short supply in Q4 versus Q3 post Ditwa. But pricing at the premium end is where we are playing and still hasn't moved significantly. And that's something we hope over time will improve. But also have taken some investments in the effluent management, in the waste management. Hopefully all of those will also stabilize into the next 2 quarters. So that is for the agri-business. Asantha?
Thank you, team, for the detailed insight and taking us through the year and the quarter, what has happened on each of the business units. With that, we can move on to the Q&A session. As I mentioned at the start, you can use the raise hand option. I'll unmute and you can ask your question. If not, you can use the chat box function to type in your questions as well. A question from Yasantha. Given the healthcare represents 56% of the group revenue, operating profit declined by approximately 1 billion following the NMRA price reset. What are the management's key initiatives to offset this margin compression and recover healthcare EBIT margins towards the historical 15 to 17 range? Shanta, maybe you can take this one up.
Yes. So it has been a very significant to us. One, this impact is in two folds. One is the price reduction, and the other is the amount of exchange loss, which in the Q4 may have not been very high, but there is a portion where we could not recover because the price increases are being granted purely by the regulator's discretion. So we have to wait for the regulator to grant us price increase. However, the price reductions will take place, have been taken place and will take place as and when the import license, as I mentioned, is renewed. So the recovery measures, we would be in different angles. One is that we need to work out some of the business models with our partners, and based on the business model changes, we should be able to recover some parts of what we have lost in terms of price reduction, because some of the models would have been in such a way that we were managing the operation, some of the expenses, where now we need to discuss with our partners and take some changes in terms of our business model, which we are very early days in terms of this impact. So therefore, we look forward for taking some measures in terms of some of the model changes. The second action point would be for us to review our internal business models and see what are the cost saving measures we can take, so that we have to sort of manage see the fit of our cost to the margins that we earn. So therefore, fit and the feasibility of certain agency accounts are underway. Again, what I would like to mention in a 4 months spread, it has been a very short period that we experienced the impact. So therefore, we are looking for certain cost savings measures, certain model changes, and also we continue to, the most important thing is we continue to lobby. This impact is not only for Sunshine, this impact is for many players in the industry. So therefore, we continue to lobby that we get certain terms which are feasible for the overall pharmaceutical operation and business. So these are some of the key points, if at all, that we are working on in terms of managing the situation.
Thank you, Shanta. Maybe another follow-up question for that from Tarushi. Could you clarify on the overall pharma market grew by 9.5 in Jan to March quarter, while Sun top line dropped year-over-year during the quarter? Given the sizable question, do you have sizable question you have in this segment?
Hasanta, can you repeat, please?
I can clarify the comment on that. So I think the year-on-year market growth is to do with IQVIA, which is our secondary sales, versus the numbers that Shanta presented is our primary billing, which, as he said, the model shift, meaning we are now billing pharma sales into the distributor as and when product arrives, versus we will generally track the market in terms of prescription sales at the secondary level. So around that same 9-10%.
Another question from Shalini. What is the current status of the government orders for MDIs?
Sure. So this is a question from a Lena manufacturing perspective. So in November last year, we received the calendar year orders for MDIs. We've received the total annual component of nearly 4 million units. So we're right now fulfilling those orders in the staggered basis as agreed with the Ministry of Health.
Yeah, another question for you from Sajid. How has the JAPC acquisition fared so far?
Very early days. We're less than 60 days since our March acquisition of JAPC. So primarily for us, there was an opportunity to expand beyond tea exports into spices, Ceylon cinnamon, pepper, nutmeg, including some coconut products, etc. So it has overall increased. It will increase into this financial year. Sunshine consumers export contribution. So we look forward to that.
Sure. Another question to you, Shanta, from Chirantaka. Has the industry lobbied for a price revision of pharma products since the rupee has depreciated more than 10% since the last price revision was done?
Yeah, the short answer is yes. And this would be in two folds to give a little bit more insight to it. There are 60 products under a gazette. So therefore, that gazette was set in last in 23rd June 2023. So therefore, those products needs an increase. And also, since July, NMRA has been controlling or revising prices, and they have been issuing something called the average exchange rate. So with regard to since July also up to January, the devaluation is more than 5%, which as per the announced guidelines. Hence, there are two sets of products needs price revision. That is the 60 products in the gazette, which is last, as I mentioned, in 23, and also recently controlled or reduced prices since July to January needs a price revision. So we have lobbied several times and have the chamber of the pharmaceutical industry also have met with the officials, and we are expecting a revision Yes.
Thank you, Shanta. Another follow-up question to you. Has Sunshine lost any import licenses since the NMRA has started reviewing?
The answer is there are few that we have lost because there are information related to those import license and may not be feasible for the principals to be in this market. More than losing, there is significant delay. So we have seen 5 to 6 months delays in the issuing of import license, which has resulted in loss of business to us and similarly to the industry.
Thank you, Shanta. A question to you, Anuruddha, from Kavisha. Do you see any indication towards slowdown in consumer spending in April and May?
Can you repeat the question, Hasanta, please?
Yeah, sure. Do you see any indication towards slowdown in consumer spending in April and May?
Not April really, I would say, but in the month of May, we really observed that April, of course, with all the challenges, there were in the segment that we are representing, FMCG, there were offers and there were consumer promotions mainly due to the season. And also the season is the biggest season for Sri Lanka, so that people spend, and not seen a significant dip in the consumer spend in month of April. But however, in the month of May, we have seen that dip. It's quite natural that after April, the month of May it's becoming a bit of a dull month. But this time round, it is more than the normal dip. There is a significant drop in consumer pickup.
Thank you, Anuruddha. Another question to you, Shanta. How is the shortage in the drugs in the market being managed if the government is taking so long to renew licenses? Are there substitutes imported by other players which could create branded products in the medium term?
Yeah, so the drug shortage is in two folds again. One is the government purchases. The government also purchases from the registrations obtained by the private sector. So therefore, there can be a shortage in terms of tender products when it comes to the government purchases, which in and out, all of you may have seen in the news that some certain molecules, certain drugs are in short supply in the government. When it comes to the private sector, what is being faced by the private sector or the patients who comes to the private sector is that certain brands will not be available because the respective brands which are prescribed are not available due to these delays and issues related to the price controls being implemented. If you look at the particular molecule, for example, let's say metformin, if you're looking for a particular brand, that brand may be out of stock, but you will be able to find some sort of a generic product in the market. But the private market is mainly driven by the brand prescriptions that are coming out in the private market. So therefore, yes, there is a shortage of certain brands that you will experience, the patients will experience in the private market in this, particularly now and next month and the month after, because of the huge bottleneck in the import license being renewed.
Thank you, Shanta. We received few questions on the agri side of things, how the palm oil ban and the profitability of the segments and all that. Sean, can you take us through?
So on the palm oil replanting ban, the industry, both the Planters Association and the palm oil industry have engaged continuously with the Ministry of Plantations as well as other members of the government on policy being science-based. They have conducted a study internally, and we believe it's quite positive. this was part of the discussion during the wage increase as well, conditional on the replanting ban being lifted. We have continued to engage with them. We are hopeful, but it's too early to predict any sort of timeline on when this can happen. Watermelon plantations, of course, has some of the older plants by virtue of us being the pioneer in this space. So close to about 25% of our 3,400 hectares is due for replanting. But any replanting will also have to take place in stages. And it takes a good 18 months for us to even commence replanting because we'll have to import the seeds, set up the nursery, clear the land of the replant of the old oil palm and replace with new, and then for it to be fruit bearing. So broadly, the benefits it's a 5-year process before even the first benefits start accruing. So this is a long-term agri sort of project. We're hopeful, but too early to comment on timelines. I also saw questions in terms of the dairy. I think dairy, firstly, at the GP level, the challenge continues to be the farm gate milk price versus the cost, operating cost. While we are GP positive and positive EBITDA in the business, their margins are still less than originally envisaged due to the higher cost of feed costs versus the price realized. The overall loss is due to the effluent management costs. There is significant expectations in terms of effluent management costs over and above budgeted, but we are putting measures in place to address those as well. So those are just two areas of agri I thought we'll address.
Thanks. In terms of group, we have Yasanta, who is having a question on the effective tax rate being high this quarter. Maybe I don't know if you can share on that one.
Yeah, Yasanta, thank you for the question. This is mainly due to reclassification of the withholding tax on the dividend paid by the subsidiary companies. Originally, we recorded this withholding tax under changes of equity statement, and we move on to tax expense line, and we restate the financial statement as well. It's a reclassification.
Thank you. So if there's no further questions, we can wrap this session up for today. On behalf of Sunshine Holdings PLC, I would like to thank everyone who joined the year-end webinar and for your continued support and participation throughout the year. And we look forward to seeing you in our next quarter webinar in our next financial year. Thank you. Have a nice day.